I look back at things we were putting out and I personally was saying and doing in mid-late February, and I just cringe. It's amazing.
In this first episode of the new series, I thought we might step back to think about the economics of the coronavirus, how economists have responded to this very different kind of shock to the global economy, and whether the right advice has been getting to governments as they try to cushion the blow. One of the best people I could think of for talking about all that was my old friend Adam Posen, who's been president of the Peterson Institute for International Economics since 2013 and also served for a while on the Bank of England's interest rate setting committee. Adam, thanks very much for being with us from your book-lined office.
Thank you for having me, Stephanie.
We're all living in a very different world from a couple of months ago or even a few weeks ago. How do you think economists have done in first sort of assessing this shock and then thinking about how we respond to it?
I think economists have displayed both the strengths and the weaknesses of the profession. The strength of being relatively empirical and, perhaps to people's surprise, having agreement on some basic principles in a policy context is very evident. There is 99% agreement that government had to be involved. It couldn't be just the central banks. And we had to think in terms of essentially bridge loans and job-preserving programs on an incredible scale. But of course, as you well recognize, and I view to my shame cringing, if you look back to what economists were talking about, including myself, in early February, mid-February, we were not seeing this coming. Our ability to forecast and our ability to think about what kinds of shocks are happening when remains very limited.
And one of the big bits of advice, I guess, that's particularly, you could see it particularly in the European government's efforts, is this effort to, if you like, hold the economy in suspended animation. Everything, the sort of bottom has fallen out of demand. And obviously a lot of businesses feeling that they will go under very quickly, seeing the kind of fall in revenues that you don't get even in a really deep recession. So you're talking about 90% or 100% in some cases, rather than even the worst kind of recession, which might see 20 or 30% fall in demand. But the economists have basically said, now what you have to do is do what you can to fill that hole that's been blown into the economy, so that the economy is then intact when you come out the other side. Do you think we know what we should be trying to do in principle? Do you think in practice we're going to be able to do that?
I think you've hit the profound insight, Stephanie, which is that even more than a usual recession, this is something where there's abrupt sudden stop, and who falls apart in terms of businesses and jobs depends entirely on cash flow at that moment. It's not about sort of merit. Did you have a good product? Did you invest? Did you save enough? It's really just the side of economic death is, do you have the cash right now, or do you happen to be in the wrong industry or the wrong place? And so the response that we've put together, and I should say we, I mean the community has put together, is really one about providing essentially a bridge loan for everybody. It's the goal to say, don't foreclose on mortgages, don't foreclose on loans, don't put people off of jobs if you can hold on to them, or if we, the government, we, the public, fund you to keep those jobs. Because there is this reality that once something goes under, if it's a company, if it's a job place, and people leave, that it's very hard to rebuild.
Some people have said that we may see a reset in our approach to government and what kind of role a government should have. Maybe it should be offering more of a safety net to people in the gig economy, for example. Will this different attitude towards government change, do you think, even in somewhere like the US?
I think it will. I think there'll be pressure in that direction, and I'm hopeful, but I also think this is going to be much more contentious. I think that there will be, I'm already talking to people who say, again, not completely unreasonably, well, we don't want to communize the system. We don't want a permanent ownership of government of all the main industries. But I certainly believe the U.S. has a real opportunity and a real reason now to move towards more safety net, as you say, for its workers, for its people. And I think also what's become very clear with the changes in the unemployment regime in the US is that we do have a lot to learn from Europe, that you need to make it so the jobs are not as fragile, as low connection, as you mentioned, gig workers, informal sector, part-time people, but also even full-time people in the US tend to have much more tenuous support and connection to their jobs at the lower end of the income scale. That should change.
Adam Posen, thank you very much.
Thanks for having me.